Hey guys, thanks for joining me on another video. Today's video is a little bit different. As you know, if you subscribe to my channel, if you watch my videos, I speak about business. We have an insurance agency, we have an advising firm, and we advise businesses. Today I'm going to talk about for the general consumer, for people that have home and auto insurance, because I know people are scrambling to not only find ways to protect their valuable assets, but they're scrambling because of increased costs. The cost of living has gone up substantially, especially in our home state of California, and so has the cost of insurance premiums, specifically home and auto. And it seems that people are scrambling. I want to give you a little bit of help or give some advice about 5 ways to responsibly save on your home and auto insurance. And there are things you should not be doing. But in this market, in California specifically, there's not as much opportunity that if you get a renewal bill from your insurance carrier that you can go out and find another one, because lots of insurance companies are not willing to take on new business and increase their exposure in the state of California. So I'm going to give you 5 ways that you can take a look at your current insurance situation and potentially save in a more responsible way without having to shop the market or switch carriers, because that's not available at this point. Very seldom available. And if it is available, it's more than likely you're getting a non-renewal and you're forced to switch insurance companies. Remember, if you find my videos helpful, please support them. Give me a thumbs up. Please comment on my videos. Please subscribe to my channel. Hit the little notification bell so that you're made aware of any future videos that I release. Okay, number 1 way to save on your home and auto is think about raising your deductibles. A lot of people, they look at their insurance and they say, man, I never use my insurance. You know, why is it so expensive? I never had a claim. Okay, so in that case, why pay premium to the insurance company for a claim that may not happen by having a lower deductible? This goes for your home and your auto. We have clients with homeowners policies that we've raised deductibles up to $25,000. They're comfortable retaining $25,000 or committing to $25,000 of any one loss. And on the auto, same thing. Raise your collision. If you're a great driver like you say you are, raise your collision deductible to $2,500. Save some money. By the way, a deductible is the amount that you're going to pay towards any loss on the policy. Sometimes by raising your deductible to a certain amount, let's say, for example, $25,000 on a home, that means that you won't be able to report claims on any losses under $25,000. That's one thing to keep in mind. But on your auto, again, if you haven't reported a claim, if you're a great driver, if you don't get in accidents, why not look at ways to save by raising your deductible? It's much smarter than lowering your liability limits. In fact, you should never lower your liability limits, especially if you own a home and have assets to protect. But here's a pro tip for you. Look at keeping your comprehensive deductible lower. Comprehensive is like your acts of God, right? Things you can't really control. A window breakage, tree falls on the car gets stolen, vandalized auto. Things like that come under your comprehensive deductible on your auto insurance policy. Comprehensive insurance typically is less expensive than collision, that portion of your policy. So look at your comprehensive deductible, keeping it low. Let's say $100, set it there. And then your collision, raise it up. Let's say $2,500, because collision covers at-fault accidents, or if someone hit and runs, or a situation where you have to get your vehicle fixed because of a collision. That's where this deductible comes into play. Generally speaking, people mentally hate spending money on things that weren't their fault. So keep your comprehensive deductible low, raise your collision, and see how that saves on your insurance premiums, specifically on your auto insurance. That's tip number 1 to save on your home and auto insurance policies. Tip number 2, bundling coverage. In today's marketplace, maybe not as much opportunity, because we're seeing insurance companies that may want to write the auto, not write the home, some that may want to write the property, but not write the auto. But if you have a carrier today that is bundling your coverage, packaging it together, you can get discounts for having more than one policy with the same insurance company. But it also makes life a lot easier. It means that you don't have 2 different bills coming in. It can mean that if you have to report a claim, you know exactly where to go. It can mean that you have a relationship with the insurance company. You've been with them for a long time, so you could be getting persistency discounts, or you could be getting loyal customer discounts, things of that nature. So my pro tip is that if you have a carrier providing coverage for more than one line of insurance, such as your home and auto, try to find ways to stay with them, even if you have a premium increase. Maybe find ways, call them up, find ways to reduce your costs with them rather than switching and breaking apart your coverage and having one policy here, another policy there. Because in the long run, that's not as sustainable as having one company that provide all of your insurance for you. For my 3rd piece of advice to save money on your home and auto insurance responsibly, try to find discounts in your policy. This is something your insurance agent can help you with. But there are discounts that are available. Carriers file for discounts. They get approval to be able to provide discounts through the California State Association or the California Department of Insurance or whatever state they're doing business. Ask if the discounts are available. Some that you may have heard of. Good driver discounts. In California, we have Proposition 103. Costco memberships, AAA memberships, home security. That's a big one, right? Let's say you have a monitored burglar alarm, or if you have fire protection, such as sprinklers in the home. Those are the types of things that you should ask to see if discounts are available. If your agent or your insurance company doesn't know that you have these memberships or you have these protections, then they won't know to apply the discount. So sometimes, unfortunately, you have to ask. Talk to your company, talk to your agent, see if there's any discounts available that you can apply to your policy. Pro tip number 1 here when it comes to discounts. If you've done any updates to your property, roof, HVAC, electrical, plumbing, fire protection, risk mitigation in terms of defensible space around your home for fire, any fire retardant that you've put around, which is becoming more and more popular, by the way. Keep record of it and provide it to your insurance company, because insurance companies much prefer homes that are updated with better systems, better materials, better equipment. If you have a new plumbing system, less likely to have a flood. If you have a new roof, could be a roof that's not going to leak, or it could be a roof that's better equipped to handle wildfire. Electrical systems, right? Really important. Cut down on the risk of fire. But let your insurance company know, let your agent know, keep documentation, send it to your carrier, and ask them. Now, also, if you're looking for a new insurance company, let's say you're getting non-renewed. Okay, this is something that's becoming more prevalent. It's going to be important because insurance carriers, that could push you over the line in terms of an acceptable risk and a risk that they're going to decline. In other words, a policy that they want to write, business they want to do, or business they don't want to do because it's an older home, older systems, or a newer systems, and they see that there's updates and maintenance performed. They're going to be more likely to insure you versus the other way. So keep documentation, let your carrier know, let your agent know. Super important. Updated systems. My 4th tip on responsibly saving on your home and auto insurance. And I smile about this one because I constantly talk to my customers about youthful drivers. We have business customers, and our business customers a lot of times ask us to help them with their personal insurance. So I speak to them all the time, not only on their business insurance policy, but their personal. If you have a young driver in the house, it's going to cost you. Insurance companies charge a premium for young drivers, especially in California, because at 3 years, with a record that falls within the guidelines of the California Good Driver discount, the carriers have to provide a 19-year-old. Let's say a youthful operator gets their license at 16. By the time they're 19, if they meet the standards, they have to get the California Good Driver discount. They have to apply that discount. And as we know, 19-year-olds still might not be as responsible as someone who's a mature driver. They're going to get their premium when they're 16, 17, and 18. They're going to charge you. I know we love to make our children happy. They want nice cars. You wind up with a 2024 Mustang GT for them. That's going to cost you an exorbitant amount of insurance money. Carriers are going to charge a lot of money for that. Why not go out and buy them an auto? That's nice. That's reliable. It's not going to cost as much money on the insurance policy because, number one, it might not be as fast, right? It might not have as much power. Number 2, it might not be as expensive to insure on the physical damage side of the auto. If you buy a brand new car, it's going to be more valuable. It's going to cost more money. Carriers rate for the likelihood of certain cars being in accidents or being stolen. The best thing to do, and I've told my clients this time and time again, buy an auto that you don't have to have comp and collision. Maybe it's an auto that's less expensive, that if it gets stolen or gets in an accident, you don't worry so much about having an insurance carrier replace it or fix it. An older car that is still reliable, but you might not have to cover it to the level that you need to cover a newer auto. This is really important because people get shocked when they add a 16-year-old to their policy and their premium quadruples. That's going to be how it is. There's good student discounts that you can apply. But again, insurance companies are going to get premium. And the last thing you want to do is reduce your liability limits because you have a young driver in the house and they're costing you more money. Don't reduce your liability limits because now you're responsible for their actions. If they go out and get in an accident, they cause third-party injury or damage, you're responsible. You're their guardian. It's going to come back on you. You should actually have higher limits of coverage when you have a youthful driver, not lower limits. Okay, now, if they buy the car in their name, let's say the car's registered in their name, you have the potential to go out and buy a policy on their own. And in that case, you can opt to lower your limits of liability. Maybe your teenager doesn't have assets under their name, so they might not have as much liability as you would if you register the vehicle under your name and insure it on your own policy. But that still doesn't mean that you can't be responsible. I want to make that clear. Even if they have their own policy, their policy should be primary. The vehicle's registered in their name, but liability can still come back on you because you're their legal guardian. They live in your household and your assets could become at risk. So you need to make sure that you have enough liability protection to cover these types of things. This might sound crazy because this video is about saving money, but pro tip number 4, consider adding an umbrella policy, especially when you have young people in the house. Umbrella policies are probably some of the best value you can find in the market for insurance. Personal umbrellas are not very expensive. They can add $1 million of coverage, not only on your personal auto liability limits, but also on your personal liability on your homeowner's policy. Really, really a great value. If you have toys out there, boats, motorcycles, whatever it may be, you can look at scheduling that onto your umbrella. Again, I'm telling you to spend more money by buying another policy, but in the long run, you will thank me if you have an issue. And my 5th and final piece of advice for responsibly saving on your home and auto insurance is to review your policies annually, read over your coverage, ensure that you have adequate limits or that you have coverage that you don't really need anymore that you're paying for, right? A couple things that I got to tell you. Check coverage A. Coverage A on your homeowners is your dwelling coverage, right? It's the coverage that is used to replace your home, to rebuild your home. If your home's lost in a fire, that's the coverage you're going to need to rebuild. Don't short your coverage A. As you know, the cost inflation in building materials has skyrocketed in the last 3 to 4 years. Skyrocketed. Multiple percentages higher than it's ever been, than it was in the past. And you got to make sure your coverage A has kept up with that. Now, insurance companies, they try to keep up on renewals and they automatically increase. But look at your policy, and if you're getting an increase in premium, it could be because your coverage A was raised up to meet the needs to rebuild the home. Check out your liability limits, each year. Don't lower your limits to save premium. It's going to hurt you in the long run. I'm telling you, I've seen it. I've been doing this since 2002. You don't want to cut there. You can lose your assets by cutting there. You can cost yourself a lot more money in the long run than you would by keeping higher limits. But there may be other coverages on your policy that you may not need anymore. Roadside service, rental car reimbursement. There's collision deductible waivers that potentially may not be the end of the world if you remove it for a couple years if you're struggling to pay your premiums. Things of that nature, and your homeowner's insurance, look at your endorsements, check to see if there's anywhere you might be able to save. But again, don't reduce your limits of coverage, especially on your major limits, your coverage A, your liability, things of that nature. But you should always read and understand your coverage. I think that's something that happens more often than not in the personal insurance sector of the world is you hear all these horror stories about a fire taking place and then insurance companies not paying the value to replace what's lost. Well, a lot of the time that's because people don't understand their limits and they try to reduce limits to save money. And then it makes the insurance companies look bad at the end of the day. When really, it's your responsibility. As a consumer myself, it's my responsibility to know what levels of coverage I have and to pay for those appropriate levels of coverage. I'm the homeowner, you're the homeowner. You should read and understand what your insurance policy entails and what coverage you have. Because if you do have a loss and you don't have the appropriate coverage, it becomes too late. You're not going to be able to recover or recoup what you thought you had, or the carrier's not going to make you whole because, again, insurance policy is a contract, and what's in the contract stipulates and determines what could be paid out. So that's my pro tip number 5. My hope is that it helps you in a difficult insurance environment, especially for home and auto, in ways that you may be able to potentially save and cut down on some of your costs of living so that you can fit within your budget and continue to pay for all your overhead. And I know there's a lot of it. As a Californian and a consumer myself, this is stuff that I think everybody's kind of struggling with. I hope it helps. Again, if you like my video, please give me a thumbs up. If you have any other tips for people that are watching, feel free to comment below if there's anything that you found to help you save on your home and auto. Let the viewers know. If you can subscribe to my channel and notify yourself of any future videos, your support means a lot to us and to me particularly. And if you have any questions or concerns or need any help, feel free to call us at 858-384-1506 or email hello@foagency.com and we'll be happy to get back to you. Thanks again for watching and we hope you stay well. Take care.